Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for December the 22nd. So what I want to do today is I want to do something a little different. I do want to talk about the charts and what I think is coming, but I also am going to do a couple of little trading lessons that I hope will help you to not only save a lot of money, but hopefully make a lot of money in the future. So before I jump into that content, please do me a huge favor. Go ahead and hit the thumbs up button on this video, subscribe to the channel, and don't forget to click that little bell icon to get notifications when I release these daily updates. So the very first thing that I want to talk about before I talk about anything else is yesterday's video. So if you didn't catch yesterday's video, essentially I outlined a scenario where we could be going back down to around $1,000 to retest 2013 highs. If you didn't watch that yet, I highly recommend you go check that out. For those of you who did watch it, I just want to say thank you for all the comments. Even those of you who didn't agree with that price prediction, you were all super respectful, and that's all I ever ask. I'm totally happy to have an adult conversation and to look at different viewpoints, and you don't have to agree with me, right? We can look at things and disagree and still be friends. So thanks for being mature adults. It's kind of rare sometimes on the internet. The next thing I want to talk about is a little bit of a public service announcement, because I've reached my fill and then some with all the fakes in this industry. So I'm going to give you guys a little litmus test that you can use to figure out if you're following somebody who's a fraud. Okay? Traders are wrong all the time. Being wrong does not make a trader a fraud. Even the best traders in the world are often wrong 50% of the time. That's why risk reward is so important in trading. What is not forgivable, what is an unforgivable mistake, is for somebody to be bullish for 6 months straight during a downtrend. This is an obvious downtrend that any first-year trader can spot. So if you have somebody that you're following on social media, YouTube, Facebook, Twitter, whatever it is, and they've been telling you that you should be buying throughout this, going long throughout this, you need to unfollow that person. Now, I'm not talking about swing trades and day trades. You could have definitely taken lots of different swing trades throughout here and been fine as long position. I'm talking about those who are telling you to buy and hold, right? Talking about the bottom is in, right? I'm seeing a lot of it. I saw a lot of it back here, and then when it pumped, they got super cocky because they thought they were right, which is so weird because this was just a bearish retest that a lot of people, including myself, had called for, right? It pumped to 9,500 for weeks. And now I'm seeing the same idiots talk about the bottom is in down here. Let me be very clear that I don't know if the bottom is in. What I do know is there is no bullish structure down here. So there's no reason to be buying Bitcoin at these levels, okay? Other than you're gambling. Point blank, if you're buying down here, you're gambling. Now, I just saw somebody on social media telling people that, well, you have to weigh the risk of waiting too long and missing the bull market. Guys, let me be very clear. You can't miss an entire bull market by waiting for the bottom, okay? You can miss a bull market by waiting for the bottom coming in, and then you being too scared to invest. But you can't miss the entire bull market. Will you miss the bottom if you're waiting? Yes. In fact, if you wait for the bottom and you wait for confirmation, you are guaranteed to miss the bottom. Does that mean I'm going to miss the bottom? Yes. I will miss the bottom. Okay? I'm perfectly fine with missing the bottom. Let me give you an example of this real quick. So if we take 2018's bottom as an example, unless you bought right here, you missed the bottom. You actually might have bought down here, by the way. If you look, there was these little tweezer bottoms, but that's a story for another time. But let's say that you were more conservative and you waited for confirmation that the bottom was in. All you had to do was wait until this ascending triangle broke. By the time this triangle happened, you had 3 months of consolidation, which is a sign of accumulation after this huge downtrend, right? This was a sign of accumulation. Why accumulation versus distribution? Because distribution would very rarely take the form of an ascending triangle. So you have sideways consolidation with an ascending triangle. All you had to do is buy the breakout at $4,100. That's not near as good as $3,200. I understand that, right? In fact, it's 33% more money that you're paying for that Bitcoin. Look, if you measure it from the bottom to 4,100, about 31%. So was somebody better off to buy back here? Sure they were. But guess what? The person that bought back there was also buying here, 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 right? And by the time you cost average all that out, their average price was probably $6,000, $7,000, $8,000 per Bitcoin. They paid way more for their Bitcoin on average than what somebody paid who just waited for bullish confirmation. So you have all of these gurus, if you want to call them that, who are telling people to buy because the halving is coming up. Guys, that's not a reason to buy Bitcoin. I'm going to talk about that stock to flow model later in this video, but that's not a reason to buy Bitcoin. That is hopium and nothing more. The halving has happened twice in history. Yes, both times price went up after the halving. Great. Doesn't guarantee it's going to happen a third time. That's number one. And number two, the last two times the halvings took place, there were no futures. If you don't understand how futures works, let me explain this in the simplest way possible. CME futures are cash settled. That means nobody is actually buying or selling Bitcoin. Why does that matter? It matters because if I want to trade Bitcoin up until 2017, I had to first buy it. What does buying pressure do to a market? It lifts the price. Now I can trade Bitcoin without ever buying Bitcoin. Are you seeing the problem? That's a huge difference, guys, in the market. It is a huge difference. You also had no way to short Bitcoin before 2017. Right? You may have been on a short a little bit on like BitMEX or something. I'm not sure about that. But I think for the most part, you couldn't short Bitcoin prior to 2017. So in a market that's left unchecked where you could only buy, you can sell, but you can't short. That's why that market ran out of control the way it did. There was nobody to, there was nobody to take the other side of that trade, essentially. You only had buying pressure. Even when somebody was selling, they were just selling to a buyer. When you're shorting the market, you're essentially introducing sell pressure, right? You're introducing the yin and the yang, so to speak. So we have futures now, and that changes the entire game. So we can't just say, oh, I'm going to blindly buy Bitcoin because the halving is coming up. And if somebody's telling you that, they're not a legit trader. They're a hopium dealer. They're probably making their money either showing affiliate links or showing some type of paid newsletter or paid program. Which, by the way, I have no problem with people who run paid programs. I have a paid program, right? I have a problem with people who run paid programs as their core source of income and don't actually trade. Especially if they're not honest about it. If somebody comes out and says, hey, I don't trade, I'm just an analyst, and they're running a paid program, more power to them. They're being transparent. But if they're representing that they're a trader and selling you a course or information based on being a trader, and they're longing a downtrend, the first rule of markets is you don't buck the trend. Okay? Swing trades are one thing, but if you're talking about buying to hold, no, it's ridiculous. Okay? The problem I have with a lot of the bulls, and this is where we're going to start getting into some trading lessons here. Okay? The problem I have with a lot of these bulls, they just regurgitate the latest, greatest craze, whatever everybody else is talking about. So we have this 50-day moving average, and basically all through this trend, people were saying, as long as we're above the 50, we're in a bull market. If we fall under the 50, we're in a bear market, which is a gross oversimplification, but that's what they were saying. When it came down and tested it right here, I remember watching some of these guys tell people to buy Bitcoin. Oh, we had this, it was a bullish close. We closed above it. This thing is going to new all-time highs. They loved this 50 line until we broke underneath it. And then they stopped talking about it, and then they didn't want to, admit that it was important. It was no longer important because now it's bearish. Because when you fall underneath a line like this, what happens? It turns into resistance. Okay? So then the 50 became null and void. So then they changed to the 100-day moving average. Same thing. It was all, hey, we're fine as long as we're above the 100. We fell underneath it. They didn't want to talk about it anymore. Then it became the 200-day moving average, which, by the way, is a critical moving average you should always be aware of. We're going to talk about why in just a minute. We fell underneath it. They didn't want to talk about the 200 anymore. Then we had something even more potent happen. We had a 50-200 cross where the 50 crossed the 200 moving down. That is called a death cross. And guess what? Death crosses are a legitimate, verifiable, bearish sign. But they laughed at it and said, oh, who cares about that death cross? The 200 is moving up, so it doesn't matter. Pretty sure it mattered. It happened around 8,800 bucks, 8,900 bucks. Look where we're at now, right? It mattered. And then it got comical because you had some of these people on Twitter, especially, saying that the 100 and the 50 crossing was going to kick off the next bull market. I said, this is, the last time this happened, that was it. That was the time to buy. And they were telling people to buy based on this cross. And I did a video saying, look, it's only happened once in history, first of all. And second of all, it happened like 2 weeks before the halving. So it had nothing to do with price moving up. Well, guess what? It crossed back here, and what did price do? It moved down. And now we're underneath both of those, so they're actually resistances. So guess what? They're not talking about it anymore. Now the big one that everyone was talking about, they didn't even really want to talk about this one, but some people are talking about the 200 because it's acted as support. I'm actually watching the 200, right? The 200 weekly. It's crazy to me. They just continually shift. Whatever fits their bias is what they're talking about. And it's really ridiculous, guys. It's ridiculous. So what I want to do is I want to give you a trading lesson. I want to do this because if you see this and I open your eyes to this, it's very possible that, number one, this will save you a lot of heartache in the future. And if you truly understand it and trade it, it could actually potentially make you wealthy. So if you don't learn anything else from this channel, you need to understand how the 200 daily moving average works. Okay, I could do a 30-minute video on this, but I'm going to try to do a very quick condensed version. The 200 daily moving average is a well-accepted moving average in both the stock market and most traditional markets. If you go out and you read any book on trading, it's likely at some point they're going to mention the 200-day moving average. Why? I don't know why. It's just at some point this became like a golden rule and people follow it. So anytime you move above your 200 moving average, that tends to be a bullish sign. Anytime you move below it, it tends to be bearish. But even more so, when you get retests, those help confirm either a bull market or a bear market, and also the way the 200 is moving. So for example, it's turned down. That's a very bearish sign. Falling underneath this when it was turning up, not good, but not the end of the world. Turning down and being underneath it, that's more confirmation that we're in for more extended downside. If you understood this 200 moving average, you could have actually made a lot of money in the 2018 market. So if you're a hodler, you could have gotten out of your positions. If you were, somebody trading futures, you could have shorted it, whatever the case may be. But let me show you something, how powerful this is. And I'm looking at a log chart. Let's turn it into a regular chart. In May of 2018, I'll never forget this. It looked like the bear market was over to an amateur trader like myself. I'd only been trading about a year at the time. Everybody was super bullish on social media. Everybody was saying, that the bottom was in. And we had this bottom right here, and then we retested that bottom. So there was actually a reason to at least consider that the bottom was in. There really was a reason for that. You had essentially almost like a double bottom, right? Trying to form. The double bottom was not actually confirmed, but there was at least some reason to be bullish, okay? And even in hindsight, I can say there was reason to be bullish before this pump. But when this thing failed, the 200-day moving average right here, this was your last chance to get out before things took a turn for the worse. Anytime you fall under a moving average, like the 200-day moving average, and then you come back up to retest it and it fails, that is a confirmation that things are getting ready to move down. Doesn't guarantee it, but more times than not, that's what you're going to see. So if you look, right here you had a break under the 200, but see, it came right back above it. And in fact, it didn't just come right back above it. It came above it, retested it, which is bullish when you retest like that, and then it moved up, right? So if you'd entered on that bullish retest at 8,100, you could have actually taken a long and sold up around 11.5. Really, really good trade if you sold it, if you didn't hodl it. But when it broke back underneath right here, came up for a retest right here and failed, that was a reason to go short. That was a reason to get out of your positions. And if you missed that for some reason and it came up and tested again and again, those were bearish retests, and then it came down and put in a double top, right? So when you have all those things lining up like that, only an amateur or somebody who didn't understand trading was longing Bitcoin at this level, and only somebody who was either ignorant naive or afraid of missing out were holding at that level. By the way, I'm not talking trash. I was holding at that level because all the big gurus were saying the bull market was kicking off and this was the start of the bull market. I was sitting in front of the school one day in May of 2018, and I'll never forget this. I told my wife I thought we should go all in on crypto. Thank God she had more sense than I did and said, hell no. But essentially, once that happened, that was confirmation that things were going to get worse. And that's exactly what happened. We stayed underneath that 200-day moving average, and we didn't break above it until 2019. So now if you take a look at what's happening so far in 2019, it's the same thing. We fell underneath it, came for a retest, down move, retest, huge down move. We broke above it, fine, right? You could have actually been somewhat bullish right here because it looked like a bullish retest was going to happen, right? So I wouldn't fault somebody who went long there. You know, even if they got stopped out, I wouldn't fault them for that. I could actually see a reason for that. But once we broke back underneath it and came back up right here, again, not good, right? That's all super bearish. So for anybody to tell you, hey, go long, go long, go long, we're under the 200-day moving average, guys. That's bearish. But I do think that we could still get this pump. Remember me saying that, we could get this pump up to that 61.8 fib? I'm starting to see everybody get complacent on the bearish side. I'm starting to see a lot of people say, oh, this is definitely going down. This is definitely going down. And I'm not so sure that it is going down. I'm also not sure it's going to pump back up to this level. It's pretty weak right now, so I tend to lean a little bit bearish. But you have to remember that the longer this takes to pump, if it's going to pump, the more this 200 moving average is moving down. And it would be super cliche if this thing ended up pumping up to 9 grand to retest the 61.8 fib. And if this thing had curled down right into that golden pocket by the time it did it, right? Another week or so, that thing's going to be down around 9 grand. So if we come up there, guess what? You're going to see the bulls getting excited, just like they did in 2018. And it's very likely it's going to be a bearish retest. And if it is, that could be, talk about FOMO, that could be your last chance to sell before this thing really gets nasty, right? I don't want you to FOMO sell any more than I want you to FOMO buy. I just want you to be aware that it actually could be your last opportunity to get, $8,000 or $9,000 for your Bitcoin before it takes a hard move south. So that's the main lesson that I want to share with you. I'm going to go over some charts here. But guys, seriously, if you don't learn anything else from me, please learn to understand how important that 200-day moving average is. It's not just on Bitcoin. It's on stocks. It's on altcoins. It's on all of it, guys. Okay? If we take a look, let me just show you an example. I don't know. We can look at OMG, right? Just a random altcoin. And if you look at the 200-day moving average on OMG, you have to get a chart with enough history here. Here you go, right? This is the OMG chart. This is from 2019. And what happened? It broke underneath the 200-day moving average, came up to retest it right around $1.70. Where's OMG now? It's at 64 cents. See how that works? Down underneath it, up to retest, boom, collapse. Guess what? Go back to 2018. Fell, came up. This wasn't underneath it. This wasn't bearish retest yet. Fell underneath it, came up, didn't quite get there, and what happened? This was around $13. Now it's 64 cents. It never made it back to that level. I'm not saying it never will, I don't know. But it never made it back to that level. Back here, it broke above it, came back down this crazy tail to test it, and what happened? From that point at $1.65, it moved all the way up to $3.60. Look at another one. How about, let's look at Ethereum. I've never looked at Ethereum on the 200-day because I don't trade Ethereum. I used to trade it in like 2017. So let's see if this shoots me in the foot or if it works. So it's rode on top of it, put it in head and shoulders, fell underneath it, did not retest it. No retest, no retest. Right here. Broke above it, came down for a retest right there. You would have been buying somewhere around $147, and it moved all the way up to $364. By the way, guys, this is why I like position trading. It's so easy to make big money being patient. Right, 149% pump. Over here, it fell underneath it, came up for a retest, but it broke through it. You could say, maybe there was a reason to go short there. I think it's cherry picking a little bit. I probably wouldn't have shorted that. Here, it fell underneath it. There was no real retest, so no real trades, but it's underneath it. Link. I actually did a video on Link, guys. If you watched that a few weeks ago, remember me saying that if it fell underneath that 200-day moving average and then retested it, that it might be good to short. Well, look what happened with it. I think it was $2.22 at the time, right? Came up for the retest right there, had the false break above it, and then I did a video on this closing this candle around 217. Where is it now? $1.90, and it fell all the way down to $1.60, based on a moving average, a simple moving average, right? I like to confirm my trades with other things. I never take a trade on one reason alone, but I'm just showing you this stuff so that I can really drill into your head like, holy shit, if I just pay attention to the 200 moving average, I'm going to be able to tell who the frauds are, because they're going to be bullish when the 200 moving average is bearish, and they're going to be bearish when the 200 is bullish. Here's Tesla, right? If you guys watch Tesla at all, it's had a historic 6 months. From June until now, it's actually up from around 180 all the way up to over 400, more than doubled, right? Completely crushed the returns compared to crypto. But look at this, broke above its 200-day moving average, came down for a retest, and if you'd have bought Tesla on the retest of the 200 moving average, you would have bought Tesla at $254, and 3 or 4 days later, it was up to over 300. And look at this. 2 months later, you would have more than, well, not quite doubled. From that point, if you would have bought on the bearish retest, you'd be up about 60%, right? So, again, if you don't learn anything else from this channel, 200-day moving average, it's freaking awesome. Use it, trust it, ignore the idiots, okay? So let's take a look at a couple charts real quick. First thing I want to talk about is this weekly chart. This thing does close today, and this is another reason that I'm I don't want to say bullish, but it's a reason that I'm not really interested in taking in shorts right now in a swing position. It's sitting at the bottom of this box, sitting right on top of support. This long tail looks bullish in nature. Typically, long tails like this are a sign of bear exhaustion. However, it also had a long wick, so this makes it a spinning top, which just points to indecision in the market. So, not gung-ho to get into a big long or a short. I'm going to wait for more confirmation before I take a trade. I'll just day trade, right? No swing trades, no position trades until I have more information available. This closes today, by the way. So in a 3-day chart, it's more of the same. We're sitting kind of in the middle of our box, and we tested the blue line of resistance. So far, it's failed, which makes it a bearish retest. We also happen to retest this downward trend line at the same time. So those both look bearish in nature to me. That being said, I'm not comfortable taking any kind of large short position, right? This doesn't look super bearish to me. It just looks like it's kind of indecisive. The market hasn't decided which way it wants to go. If we take a look at the daily chart, this is our triangle chart, right? And if we look at this, again, this right here looks like a bearish retest of this larger triangle. We also had a bearish retest on RSI at the same time. So those both look bearish in nature, but, it looks like it's trying to put in a little micro W there. So not confirmed yet, but enough, indecision that, again, I'm not going to jump into a position trade or a swing trade. I'm perfectly fine just waiting. We had this little triangle forming on the 4-hour. A couple days ago when I talked about it, it looked something like this, I think, at the time. And I said it looked too small to me, that I thought it would, end up being longer. And I think I said it would end up looking something like this right here, right? I thought it would go up to around 7,200, 7,250, something like that. It hasn't got that high yet. Looks like so far it's kind of found resistance at 7,200 itself. I was actually looking for it to get up to about 7,290, so up in this area. But the triangle is getting longer. So far it's still a triangle, right? It hasn't confirmed, hasn't broke out of it. So I really shouldn't say it's a triangle. I should call it a potential triangle, okay? I still think that it's likely that it could move up and test that 61.8 fib on that move. So again, not going to take a swing trade, not going to take a day trade. One of the things about trading that people don't get is they think you always need to be in a trade. It's just not the case. Capital preservation is one of the most important parts of trading. If you don't know right? And you never know. But if you don't have a good feeling for the market, if you don't feel confident that, hey, this is going this way or this is going that way, the best thing you can do is just not trade. Wait until you do feel confident. Wait until you do have more confirmation. You know, I see a lot of stuff in this chart that could go either way. This could absolutely be a BART. This could get ready to come down and, you know, just completely crush a lot of people. At the same time, it could also move up, right, and go up to that $8,800 to $9,000 area. You know, I'm seeing a lot of people who basically think that's impossible. Like there's bears who think it's just impossible that it's going to pump that high. And then I see the bulls who think it's just impossible that it's going to go any lower, right? Neither one's impossible. They're both very valid and plausible scenarios. And I think it's a 50-50 at this point. So whenever I get into a trade, I don't want a 50-50. I want to trade where I'm like 90-10 or 80-20. I want to be like 80% sure that this is what's going to happen, or 90% sure this is what's going to happen. And if I'm not, I just won't take the trade. So that's what I'm seeing, guys, on Bitcoin. One other thing I want to talk about real quick. I want to talk about the stock to flow model. I said I'd talk about it earlier. So I am not an expert on stock to flow, number one. It seems like a very overly simplistic model to me. I just don't think it can be trusted. But if you do trust it, fine. No harm, no foul. I would say this. Number one, like I talked about earlier, you have to remember that all these previous cycles were different because they didn't have futures involved. So I do think that drastically changes the stock to flow models, you know, whether it's accurate or not. Also saw this on Twitter today. I know nothing about the people who released this. I'm not condoning them. I just find the paper interesting. Essentially what they were saying was they feel like there's a better way to calculate the stock to flow. And if you look, you know, the current model that people like to tout predicts that Bitcoin is going to reach $100,000 in 2020, 1.3 million in 2024, and 18 million in 2028. And when you look at it like that, it sounds ridiculous, right? It absolutely sounds ridiculous. $18 million per Bitcoin? Come on now, right? I think anybody that sees that needs to question the stock to flow model based on just this alone. But what they've essentially done is they've reworked this model using a capped model. And using this capped model, they've actually come up with new targets. Now, these targets actually look realistic to me. Even as bearish as I am, these I could see, right? This capped stock to flow predicts $25,000 Bitcoin in 2020 by the end of the year. It predicts 70,000 by the end of 2024, and it predicts 170,000 by the end of 2028. So if we get to those numbers, if I could see that, I could see us getting to $170,000 per Bitcoin by 2028. If Bitcoin becomes globally adopted and actually starts to move more into the mainstream, those look completely feasible to me, right? And let's be honest, $170,000 per Bitcoin, ooh, that'd be awesome. I would love that, right? But again, it's much more realistic. We're talking about, 8 years from now. And in 70,000, we're talking about 4 years from now, really 5 years, because it's the end of 2024. So that's 5 years to get to 70,000. I think that sounds feasible. And in fact, it lines up pretty nicely with what I've been saying. We need to find a bottom and then have a 3 to 5 year cycle. So, 2020, 25,000, that sounds a little bit optimistic to me. But again, we don't know. We don't know how the halving is going to affect things. If it does affect it the way it affected it the last 2 times, and if it proves that, the futures don't matter as much as I think they do, then yeah, we could see $25,000 Bitcoin next year. It'd be awesome. All that being said, obviously I am just some guy sitting in a spare bedroom, so take that with a grain of salt. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. This is James with Crypto Common Sense. Hope you enjoyed the video. If you haven't already, you can check the description for links where you can follow me on TradingView, Twitter, and of course, join my free Facebook group. And if you'd like to learn how to trade and like to learn more cool stuff like that 200-day moving average strategy, there'll be a link for that in the description as well. This is James with Crypto Common Sense. Trade safe.